So welcome back to Startup Grind. Today we're back again. It's Tuesday, 26th of February. Great month, great event. We're back here to talk about great stuff. Today we have Mr. Salum Awadh, who is the founder and CEO of SSC Capital. The man has been around for a while. We've heard him in different talks, workshops. We've listened to his story, and we've also seen him as a person people would call the money raiser, the capital raiser, and so many other words as well. But we're here today to understand his story and to also understand the nature of capital and fundraising in the country. So welcome back to Startup Grind. We're happy to be back with you here today. And Karibu. Salum.
Yes.
Humble. How are you?
I'm good.
Welcome to
Thank
Startup
you.
Grind.
Thank you.
How was your day been?
So I have to raise my voice?
Oh, yes.
Oh, okay.
Yeah.
Yeah.
So how's your day been?
Pretty well. So far so good. Ending the day, I guess.
Okay.
Yep.
You had a busy day. You told me today you had meetings, and I think it was supposed to be friendly, but it became more business.
Yep.
So you're always a busy man.
You know, when you're building stuff, you have to be busy. Until when stuff are really taking shape, probably you can start, building a team, and some people taking up some of the stuff you're doing. Probably can free up your time and get less busier.
Okay.
Yeah.
Who is Mr. Salum Awadh? Simple but hard question.
I know. Salum Awadh is a Tanzanian father, 2 kids. Determined and futuristic guy with a lot of passion in the space of finance and investment. A little bit of patriotism, I guess, in me.
A little bit.
Yeah. I don't know how much is it. So yeah.
Okay.
Born and bred in Tanzania. Yeah, doing my stuff.
The finance spirit, because I've heard a lot of stories, and some people would come and say, my mother was an entrepreneur, she used to sell this, she used to sell that, and that spirit got inside me, and I decided to be an entrepreneur as well. You said you have a spirit of finance. Is this something that you got from your family, or you got it from school?
No, actually, I didn't even get it from school initially. It's something that I think I developed after my second job.
Okay.
So, yeah, so my mother can't say much about her, about career and everything, so she didn't have any influence on me. I think she died when I was 10, so she didn't have much influence on my career and my life and whatever that I'm doing today. My father was an accountant, but he never did anything to inspire me to be one.
Okay.
So after I did my first degree, started working, and after my second job, actually, that's when I started developing interest in the finance industry.
Okay.
Yeah. And that's how it shaped me actually to do my second degree in an area that has to do with finance.
Okay, so did you quit your job? Was it a job where it was just finance and accounts?
So my first job was not much about finance, because my first job was with USAID, and it was much more about programs, project management, donor stuff.
Okay.
And my second job, I worked in a pension fund, and part of the work was much more to do with finance and investment. Because I was doing compliance in the fund, and part of the work as a compliant officer is to make sure that the fund complies with everything that they do. If it's about investment, then the fund complies with the investment policy. If it's about contributions, and then the fund complies with the contribution policy and all that kind of stuff. So this exposed me to a lot of stuff. Actually, one of my duties, I was in charge of designing and managing the payroll for all the pensioners. Yeah, so I think that gave me a lot of interest in that space.
Which year was that?
2006. That's when I started working in pension fund up to towards the end of 2008.
I was thinking about that because I was thinking about my pension right now. When to take it, and the requirements and the calculations are sorted right now, right? So I thought you still have connections, right? If I just want to get Sure. So now I'm getting the connection, compliance and what you were dealing with and who you are today. So there's a connection between your job. I bet you got some knowledge. Let me just say you stole, in a good way, the knowledge that you were getting from your work to who you became right now.
Yeah.
Great stuff.
Yeah.
So when starting your business, you decided to quit your job and start a new life. Tell me how you developed your business plan. How was it? How is it?
I've always believed in myself, in the sense that I've always believed that I can do more than what people can think I can do. So in school, I remember I always try to do more than what we would do in ordinary life as a student. I remember when I was in uni, my first degree, I started an NGO. Yeah, but of course it didn't take off.
Okay.
But then I didn't know anything about where we could source some funding and stuff like that. So I think it just died a natural death. So when I decided to quit my job and start my business, actually the whole idea was, you know what, it was a lot of frustration with my day job, actually. And it has a huge influence on why I decided to quit my job. So my first job was good, interesting, US side, good working environment and all that. And then when I decided to join the pension fund, there's a lot of inherent, I would say, government stuff. And when you work in the government or any type of establishment in any country in the world, not just in Tanzania, it's not always easy to change the way the government conducts itself. Government always has its way of doing things, the way of doing its business. And then this is Salum coming from all this donors world, trying to change the way things were done with the pension fund. And it was really frustrating. I'll give you one simple example. Given my role as a compliance officer, one of the things I was supposed to make sure was for pensioners to be paid on time. So if you look at the service chart of the fund, by then it said a retiree needs to be paid in 7 days. But actually, for the whole time that I was working there, I couldn't never see that. So pensioners were paid in months, some in years, and I didn't like that. So I initiated something to see if we could pay people in 7 days. And I faced a lot of challenges in that space. So some people thought probably I was trying to, reinvent the wheel, trying to, reintroduce type of the things that probably they have not been doing since the fund was formed. And this talk in government offices. So you are a new guy, fresh from school. You think you can change the way they operate here. Whenever you want to change the status quo, there are always two options. You either join them, or you find your way out. So for me, joining them wasn't an option. So since then, I was getting all this job dissatisfaction. Every time I'm going to work and it's something that I start developing all this type of dissatisfaction with my job, and then I don't like it, and I'm a type of person that I don't like to complain, and I don't like people complain, because if something's not working, you have to do about it. If you can't do anything about it, you better shut up, but don't complain. So I didn't want to complain about my job every now and then. I said, you know what, if I cannot change this space, probably I need to quit this job and go to some other place. And then I had my time to think about that. I said, you know what, you can quit this job here and go to another employer, and probably you can face the same experience. Because job is job. It doesn't matter where you're working. And probably we can even get a worse employer. So I said, you know what, why not do my own stuff? Why not do my own stuff? So I didn't have this entrepreneurial thing in me by then. So I decided to see what could I do easily without requirement of a lot of capital. So this is another lesson to an entrepreneur. When you're trying to do something as an entrepreneur, you always need to go for a business model that doesn't require a lot of initial investments that you cannot easily raise. So I decided to see, okay, I have this knowledge. I thank my first employer. I thank my second employer. I'm appreciative of whatever they did. They gave me a lot of knowledge. They sponsored me to go and do some certifications, some abroad and all that. So I was so equipped in terms of knowledge. So I said, you know what, maybe I can use my knowledge as a commodity to sell in the market. So that's how I decided to set my consulting firm, and that's how I quit my job and start selling knowledge.
Okay.
Yeah.
So your day-to-day, most of the time from back then, was advisory rather, consultations, and later on you moved on and you became, let me not say moved on, but it got better. So now I'm thinking, VC, venture capitalists, a lot of people are hearing that word, and sometimes you have met these VCs and angel investors. And some people, they're still trying to get the difference between the two. Who are you? Are you a venture capitalist? Are you an angel investor? Which role do you play the most? And how, please define me those terms.
So I'm yet to be a venture capitalist. Even though I work with venture capitalists on a day-to-day basis, I'm still an investment advisor. Okay. Mostly part of my work as we speak today. I'm partially an angel investor. Okay. And you know, when you set up an angel investors network anywhere in the world, you're supposed to commit your own investments before other people signing up to the network. So I am in the space already as an angel investor. We haven't done any deal as yet, but we're looking forward to that. So the difference between angel investing and venture capital is simple. So venture capital is much more of investing in early stage companies, risk capital, chances of failure are high, and the amount of investment are low. Venture capital is much more of investment in growth level companies, not early stage companies. Okay. Much more investment in terms of sizes, less risk type of capital, and more chances of success. So let me give you simple data to demonstrate on that. If you invest in 10 companies today as an angel investor, chances are only one will make it.
An angel investment?
Yeah.
Only one?
Yeah.
So out of 10. So imagine we have 10 people over here, only one of you guys will make it.
So that's the data in the market.
Don't lose hope. Don't lose hope. You might be the one.
Because it's not about them actually.
Yeah. it's about
the investors.
Yeah, the investors.
Yeah. So that's why you see, as an angel investor, you cannot commit big investments. Okay. Because the risk of losing your investment is very high.
Quite big.
Yeah, so that's why you would see a lot of angel investors who will do $10,000, who will do $5,000, who will do $100,000, and stuff like that. That's why the best way to promote angel investments is to have a network where you can mobilize small investment from different people, because you spread that risk for different people and then invest in one company. So if you come to me today and a startup is looking, say, for 100 million shillings, and if I put all that money in you, that means I'm taking 100% of the risk of that. And if the success rate is 10%, and if I only invest in one company, that means I'm taking a shot of 100% loss risk exposure. So what would happen is, for me to invest in this company that's looking for 100 million, I can only do 10% of that money. So say I can put in 10 million.
10 million.
And then I have to get other 9 people, to put in 10 million each. So each one would have less risk, but we have 100 million for this guy. So if anything goes wrong, if I had 100 million in my account, I would have lost only 10 million, which is only 10% of my money.
So that is in angel investing, right?
Yes, exactly.
So now I'm thinking about the mechanism that you're using when it comes to financing. Should I make it broad, either as a VC or as an angel investor? Because you've mentioned one way of actually doing that investment. Yeah. Are there other mechanisms that you guys use?
Yeah, so the thing is, the whole industry is called private equity. That's the industry. And it's simple, because you have 2 types of equities. One is public, which is stocks. So a company wants to raise money, okay? You go to the stock market, you sell your shares, people buy shares from you, and then you raise the money, you can invest in your company. So we call this public equity, because you raise this money from the public, okay? So the other type of equity is private, where you raise money from a private investor. We give you money, of course, in exchange of shares. The same thing as it happens with the stock market, where we also sell shares. So the private equity as an industry is categorized. So you have early stage, where you have the angel investors, and then you have mid stage to probably little late stage, where you have venture capital, and then you have the later stage of private equity, which is called private equity. So these are investments you're talking about $25 million and above. So, but there are many models where people can invest in a company. So with angel investing, actually is not a rule that you must be a group of people to invest in a company. Even one individual can invest. So it depends on your risk appetite and how much you want to invest in. If you look at Tanzania, for instance, people have been investing in startups, but informally.
Okay.
Families, even non-families. Yeah, so it's almost in the same category.
Okay.
The only thing that we are doing as a network is just to organize the market, organize the capital, and de-risk these companies that need to receive investment from these companies. So most of the informal angel investors who have been investing in these startups, most of them have failed because they didn't have a way where they could invest in these companies by minimizing the risk of investment. Okay. So for an angel, that's the way it works. Venture capital works differently. Okay. So the venture capital is the way it works. We as SSC Capital, we set up a fund, which we're doing now as we speak. So we set up a fund, and then we go to investors to give us the money. So we become a fund manager. So we take money from different financial institutions, could be insurance companies, could be pension funds, all these type of institutional investors. They give us the money so we can raise, say, $2 million from different institutions. And then once we get that money, we don't talk to them until the exit for a while. So the way it works is most of the venture capital funds we call close-ended, meaning if I raise the money today as a fund manager, as a venture capital fund manager, what will happen is I tell the investors, you give me the money, I'll invest in these companies, and you're going to get your money back in 10 years plus, say, 25% return on investment.
Okay.
So what you do is in 10 years, I have to invest and I have to exit. Because if I invest in you, I have to sell all the shares which I've invested in you times a certain number for me to be able to return this money to my original investors, plus the return which I promised them. And that's how I also make money as a fund manager, because I'm going to take a percentage of the profits which I'm going to generate for them.
Okay.
So once I have the money, now I invest in the companies, so looking for companies now. So that's what we do as SSC Capital now. We help all these venture capital funds to look for these companies and invest.
It sounds easy, but it also sounds hard, eh? Because this is what I'm thinking. Now I'm comparing between angel investing and venture capital. One is hands-on, very, very hands-on, which is the angel investing. You have to really make sure, like, are you doing your job right? This is the feasibility researches. It's an on and on day-to-day basis, right? Is it day-to-day, weekly basis thing?
No, so with the good thing about having a network like Tanzania Angel Investors Network is we support the investor not to be hands-on on day-to-day basis to this company which they invest in. So what we do is we're going to be on your neck once you get the money from the network. But it's not on day-to-day basis actually. Okay. So what we do is probably we're going to have sort of a quarterly review of your business performance.
Okay.
That's why any investor, before he invests in any company, they want to understand about the team behind the company. The idea is if you have a strong team, our investments are secure. So you can invest and do what you say you're going to do. If you say you're going to double yourselves in 12 months and you have strong people who can do that, that's what the investors want to see.
You know, now I'm thinking, you know, they say within a year or a certain time, 70% of the business usually fail. And now I'm thinking that we have a lot of informal, our parents, our friends, and some fool has decided to give us money in one way or they call them the 3 Fs, right? Don't worry, no offense. But now I'm thinking, is it the reason why a lot of people fail? Because the regulation is very minimal. Because I'm thinking, in the most formal way, in the most traditional way, we have banks and blah, the whatnots, and these guys have always been regulated by a bigger body. And you guys, when you come into our system, you kind of regulate the form of money that you give us. But these other businesses, about maybe I could get a friend from here, you give me 20 million, whatever, and I use that 20 million, it just randomly evaporates. Could it be the reason why a lot of our businesses are failing?
Yeah, because you know this is a double-edged sword, I would say. The business, of course, 99% the business can fail because of the entrepreneur. And if the investor loses his money because most of the businesses fail in the first 5 years, and then we say this is not a sophisticated investor. So if you go to the US, no angel investor can invest before signing and declaring that he's a sophisticated investor.
Okay.
So anything that I think is from $10,000 and above, you have to declare that you know what you're doing.
10,000.
I think.
Is that the same narrative over here?
No, so we don't have any regulations about that. So anyone can become an angel investor. So what we're trying to do is to at least to define who is an angel investor, at least to minimize the risk of this investor loses money. So what we have agreed is, so this the Africa Business Angels Network, which is like it's like an umbrella board for all angel networks in Africa. And they have proposed for a definition of an angel investor in Africa that someone has three qualities. Someone has the money to invest,
okay,
someone who's a successful entrepreneur, and someone has a network that can be shared with an investee company that would help that company to grow.
Okay.
Which of course partly is working and partly is tough, because getting this type of people to sign up to the network is really, really tough. And in Tanzania, unfortunately, there's a lot of informal savings which we need to tap and relocate to startups.
Okay.
And some of these type of savings are actually not within the individuals with these three qualities.
Okay.
So if you really want to stick to the definition of three qualities of an angel investor, you may struggle in terms of getting the amount that you want to see in the network for you to make some decent investments.
Okay.
So I'll give a simple example. If you look at Vikoba in Tanzania, they have in excess of 1 trillion in terms of assets. And where are they investing all this money? So they mostly do loans, and probably if they were to invest, they will probably do some fixed deposits. Most of these type of investments are low risk, like fixed deposits. And low risk is what? Low return. So if you invest in a startup, it's high risk and is what? High return. So we're trying to see, okay, if you have 1 trillion, you can allocate 20% of that money to the network. A network can invest in some of these startups that probably can grow 5-6 times in the next 5 years. And probably you see your money grow 6 times from the day you invest that money. But you can also lose your money. Remember the risk.
Okay.
That's why we say, you only allocate part of your investment. So startups fail just out of the reasons of the entrepreneurs behind the companies. Mm-hmm. That's why if you go into the investment world, they tell you we don't invest in companies, we invest in people. So it's all about what type of an entrepreneur is running the company, and what sort of integrity this entrepreneur has, what sort of background, what sort of things can he do, how patient are you, how aggressive are you, how committed are you. Some entrepreneurs go into business, things get really tough in 12 months, and then they're planning to quit, some start looking for jobs, and then you are not a material for an investor. So an investor wants to see someone who can really take the shit.
Okay.
When the shit hits the fan, as they say. Yeah, so it's really tough in that sense. But if you look at the reasons why business fails, it's the same stuff. Probably you have a wrong product or you have a wrong service.
Okay.
Maybe you're serving the wrong market. Maybe you haven't done your homework, you didn't do enough of your research. Maybe you don't have the right team in place, and all that type of stuff. Maybe you haven't done your risk assessment well, so some of the risks, whenever they mature, you fail to mitigate this type of risk and they take you out of business.
Okay.
So if you're in cashew nuts now and you invested all your money and probably you didn't factor in policy uncertainty as one of the risks, then now you're in deep waters.
Okay. So now I'm thinking, you even gave us criteria that people look at if you were to be called an angel investor or whatever. Now, what do you look at, either if you are almost about to be a VC or an angel investor, when you are trying to look at a person's app? Now, do you look at a person and say, your business, you're not making any kind of sense? What are the criteria that you look for, or the things that you're looking at?
So things that any investor is looking at, actually as we speak now, one thing is, which problem is this entrepreneur solving? That's the most important question. No investor will invest in your company if you're not solving any problem in the society. So this is the new trend in the investment world, because we understand that anything to have a validity in the market is because there's a problem in the market. So if you look at Uber, for instance, there are a lot of problems in the tax business in the past. Tax drivers probably could not get enough business because they wouldn't know someone is in need of a tax 2 kilometers away from where they are. Tax riders wouldn't understand how much they should pay a fair price, because there's no any scientific way to determine your fare. So you talk to this taxi driver, take to the airport, will tell you 50,000, the next guy will tell you 60, the other guy will tell you 30. But at the same time, people would have cars, and cars would turn into liabilities, while they could use the cars as an asset to work part-time and make money as an Uber driver. So they saw that problem, and then they came up with a solution. So we understand the moment we have a problem, and you bring in a solution, there's already demand for your solution in the market. So the first thing they look at is, what problem are you solving? And as they say, the bigger the problem, the bigger you're destined to be as an entrepreneur. Okay. You solve a small problem, you become a small entrepreneur. You solve a bigger problem, you become as big as you can. So youth in Tanzania account for what, more than 50% of the population. So if you have a problem among youth, and you want to bring a solution for the youth, you can understand how big of the market that you're serving. So second thing that investors are looking at is, which is connected to one, is the size of the market. So what size of the market are you saving? Because some you have 2 types of products or services, or 2 types of market. You either have a product for mass market, like what Barclays is doing. So small margins, bigger volume, making more money from the numbers. And then you have another market, which is a small market, spending more money, is a premium market, is a premium product. So you don't have many people to buy from the product. Few people can do that. So you talk about Mercedes-Benz, you talk about BMW and stuff like that. So you don't have to sell a lot of cars. So look at Tesla, for instance, today, electric cars. They don't have to sell 1 million cars a year. So they can sell less than Toyota, but they can make more money because it's more price. It's a premium product. So that's the second thing that they look at first. Third thing is the entrepreneur himself, in terms of character. And the character of entrepreneur, actually, you can measure that in many ways. So when you're having the conversation from day one, the way you talk to an entrepreneur, you get to know what kind of person he is, the way he expresses himself, the way he responds to your questions, the way he talks about the business, or the way she talks about business. And if you have an opportunity to pitch, the way people ask you questions and the way you respond to questions during pitching, that will define what kind of entrepreneur is that. And normally, investors tend to ask very provocative questions to entrepreneurs and see how you respond to that.
Are there specific questions about
random
Just
questions?
give these guys a secret. Are there specific questions or things that you expect to hear from them?
No, this is the random questions. So you ask someone. So I don't want to mention the name. So yes, actually the day before yesterday, I met an entrepreneur who's been doing a business for the past 12 months. And this entrepreneur is quitting that business. And I asked why. And this entrepreneur, so I'm not going to mention he or she. So this entrepreneur said, I don't think this thing can solve my daily problems, because I need to eat. And I have a lot of challenges in my life, so I cannot depend on my mother or my father to provide me for my provision. So if this business is not giving me this, then I have to find something else. That is a big red flag for an entrepreneur.
True.
So that type of questions. So why do you quit? The way someone responds will tell you whether this is the entrepreneur material or not. Okay. So if you look at all successful entrepreneurs, they'll tell you how many times they have failed. So they say the guy who founded Starbucks, which is the largest coffee shop chain today in the world, was turned down more than 240 times by banks when he went to ask for a loan. So you can imagine what kind of consistency and perseverance this guy had. So another thing that investors, of course, look at is the team. Because all entrepreneurs, when they start a company, if you start a business, probably chances are you may not be in a position to amass a bigger team to work with you, because it's expensive to hire a qualified team. So all investors know that. There's no investor who's naive thinking that you must have this team from day one. But there are many ways you can build a team. So you can, if you are a good, as I say, if you cannot code, you hire someone who can code and become your co-founder. So you can build a team in that way. If you don't have strengths in the financial area, then you can get someone who has the expertise in strength area, and then you can become your co-founder. And then that's how you can build your team. And then probably you can have interns and other kind of stuff who can build, can create sort of a team structure that you need.
Okay.
Because no investor will invest in a company which is one-man show. Because the thing is, anything can happen to you. So last
you made me think about your, you made me think about your team, which is here somehow. I don't want to point at them, but I think they're here. I want to know the structure of your team and how you built it up.
So it's a small team because the consulting industry is different. So Abdul is much more a person that who is here, much more someone who can take up an assignment and can do it from the scratch. But consulting industry is different. Consulting industry, you don't hire people to stay full time. Because it's much more of a project-based type of a team. So once you have a project that needs more people, then you can hire these sort of part-time associates to work with you. Otherwise, you can have probably one accountant, admin, just to provide all that kind of support. You can have an office messenger, and then probably you can have some other guys. But the type of business is once you start building, you must have a team. So we are setting up a fund now, which we're gonna probably start investing next year. So we are raising money now. The moment we manage to do that, then that type of a business, you must have a full-time in-house team of people who have expertise and a background in funds management. Okay. So it's different in that sense. But at the end of the day, you must have a team. And in sometimes when an investor may ask an entrepreneur, okay, you don't have a team now, but what's your plan with the team? Do you have names already of the people that you think can work with you once you have the money? Do you have their CVs? Have you interviewed them? Do you think which position they're going to take up? What's their background? What kind of stuff? So you normally have this type of thing before you have a team in place for you to work with you full time. So other thing is, of course, is the usual, the compliance, because no investor will invest in a company that is not legally compliant.
Okay.
So you must have all the restrictions with you, because before an investor makes an investment, there's a process called due diligence. So one of the things that you do due diligence is to see whether this company has all the legal compliance with the government. Okay. Because you don't invest in a company and then 3 or 4 months down the road, TFD is knocking, TDS is knocking, and she doesn't have all the certificates, and hopefully your investment is at risk. So you must make sure that when you're going to a business, you must know what type of compliance you need to have in your industry, and you must have all that in place.
Okay. So guys, thank you very much for coming. A big round of applause to yourself and Mr. Salum. Thank you very much for coming. We had a great session today. It was very insightful. As Startup Brand as a team, we don't have much to give as a community of entrepreneurs. Obviously, we're building and we're building and we're building, but we're so happy you came here. You took your great time to come and explain a lot of things today. And I think a lot of us today have been writing, have been recording, and it's also going to be on YouTube as well, so you also listen to the conversation that we had. But we're very grateful. And with this, we give you our certificate. Thank you. Asante kwa kuja, asante kwa kushare madini ya maana, and photo-op moment. Yeah. So guys, the session is done. Lakini karibuni tena next month. Yes, you're allowed to clap. We have an event next month. It will be on the 29th, eh? How can somebody on this side know more than I know? Eh? Great. So come through next month. Yamani, we have a great event as well. Tell your friends. Karibuni, and you'll be getting our newsletters as well.